Hey everyone, welcome back to Corporate Decoder, the place where we help you understand those big corporate filings you might see around. And today, well, let's just say we're going to decode a little tweak to a deal that might seem small but could have some pretty big ripple effects for Funko fans and investors, so stick around to see what's really going on. So what we're looking at today is what's called a Form 8K filing with the Securities and Exchange Commission. This is like a breaking news report for publicly traded companies. They have to file it whenever something major happens that investors should know about. And for Funko, which is that company behind all those cool collectible figures, it's an update to an existing agreement with its biggest fan, well, actually its biggest investor, TCG, Fujifilm LP, or TCG for short. Now, Funko is known for its pop culture collectibles, like its Funko Pops that you see everywhere, but it's also a publicly traded company, which means it has to follow strict rules about how it tells people what's going on with its business and its big investors. This filing is all about an amendment to a previous agreement called a stockholders agreement. This agreement was put in place back in May 2025, and it basically lays out some rules between Funko and TCG, especially about how TCG can influence big decisions at Funko. Here's the key part of the original deal TCG. As long as they and their buddies own at least 22% of Funko stock, they get a say in certain big moves the company might make. This gives them the power to approve or block some major actions, like if Funko wants to issue more stock to raise money. Now, why is this important? Well, Funko sometimes sells its stock directly to the public through something called at-the-market offerings. This is a way for companies to raise cash by selling shares on a regular basis based on their current stock price. TCG has the right to approve these sales because they could dilute their own ownership stake. So what's changed? On August 14th, 2025, Funko and TCG agreed to amend this deal. The big change is that for future at-the-market offerings, the 22% ownership threshold that TCG needs to meet to keep its say in things will now exclude up to $40 million worth of stock sold this way. This is a pretty significant adjustment. Think of it this way, TCG's power or their consent rights are now a little less sensitive to these specific types of stock sales by Funko. They're essentially saying that these types of regular stock sales won't count as much towards their overall ownership percentage when determining if they still have that approval power over certain company actions. This amendment essentially carves out a portion of potential stock issuances from TCG's veto power without changing the fundamental control they might still have if they own a larger chunk of the company through other means. Let's look at the shares themselves. Funko's main stock is called Class A Common Stock, and its trading symbol is FNKO, and you can buy and sell it on the Nasdaq stock market. The actual document detailing this change is listed as Exhibit 10 Foin if you want to read the legal nitty-gritty. But what it means is Funko has a bit more flexibility now to raise money through these regular stock sales without needing TCG's explicit approval for every single sale up to that $40 million mark. Now for a bit of commentary and my take on this situation. On the surface, this looks like a positive move for Funko's management. It gives them more agility in managing their capital structure and potentially funding growth initiatives without being bogged down by needing to get approval from a major shareholder for every at-the-market offering up to a certain amount. It's like a pre-approval for a specific type of financial maneuver. This could signal that Funko is planning to be active in the capital markets soon, perhaps to fund new product lines or expand into new territories, or maybe even to buy out other smaller companies that fit their brand. The fact that they negotiated this with their largest shareholder suggests a degree of alignment and trust remains between Funko and TCG, which is generally a good sign for overall company stability. However, it's also worth remembering that TCG is a significant investor, and even with this amendment, they still hold considerable influence if they maintain a substantial ownership stake. Investors should keep an eye on Funko's overall debt levels and cash flow to ensure these new capital raising activities are done responsibly and are genuinely creating value. We don't have specific financial tables in this particular filing to dig into, but in other filings we often see how companies report their revenue and profit, which would give us a clearer picture of their operational health alongside these strategic financial adjustments. So what's the takeaway for us? Here's a company making a smart adjustment to its financial agreements to potentially streamline future funding. It's a small change in the grand scheme of things, but it greases the wheels for management to act more decisively when it comes to raising capital through stock sales. It's not a huge red flag, but it's a point of attention for anyone invested in or considering investing in Funko. Alright, that's our breakdown of this Funko filing. What's your take on these changes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives like this. And don't forget to check out our Discord channel linked in the description for even more discussions and insights. Thanks for watching. See you next time.